Okay, everybody, good morning. It's Wednesday, May 2nd. If you hear a tinge of frustration in my voice, it's from making both technical and time errors for the last 44 minutes. But it's simply because there's not a lot going on. Okay, there really isn't a lot of market structure, so I'm trying to comment on what's going on in a very short amount of time, and that just isn't working. So let's go ahead and get some perspective here. But first, I do want to thank everyone who gave us well wishes for our 12th anniversary last night. It has truly been a blessing to be married to this woman for the last 12 years. So thank you very much for your well wishes. We've got the trading lane that we're tracking. Long-term trend up, mid-term trend is up. We've got to be aware, however, that the short term is starting to turn down. I'll comment on that in just a second. So let's get some perspective as we zoom in here. This was the high for 2006. Here was the high from January. These were both prior 15-year highs. And you can see that the market has pushed up 230 pips from there and is now starting this consolidation process down. Remember, as soon as the market broke out, what did I say? That we should look for a pennant pattern or a flag pattern coming into this area, and that specifically this zone was going to be a critical area for the British pound, right? So we can see that this is playing out right in front of us. This is the benefit of planning ahead. We're not reacting to the market. This is as expected. We're waiting for the market to come to us. So I've got to switch charts here because I've had some issues with my data. There we go. Here's the 4-hour bar. So you can see here, first of all, that we are looking at the market making a double bottom right here. Okay. The reason why I'm discounting this low is because for two reasons. One, the market didn't stick down there. Number two, that was during the dead zone for the British pound. So that to me isn't as viable as a support area as it is down here. What does that mean? Well, it means I'm still looking for a 3-bar reversal here as the market starts to play out. I'll look for that 3-bar reversal on the hourly, but I'm also keeping my eye on candlestick reversals. I'm looking to see that we're going to get the same kind of structure over here. But in the back of my mind, I'm realizing that if the trade does manage to string along, I've got to be aware that the market may seek this prior low. We've also got the flag pattern. Let me go ahead and clean this up a bit. The flag here, which places the low possibly 9,800, 9,820 area right about here. So we've got a couple of prices that we can look at making this support zone right here. Remember, all we're looking for is market structure at this point. What we might wind up seeing, the market making, some kind of pattern like this, a flag, possibly a pennant as it gets into this area. That's more than likely what's going to happen. You've just got to keep your eyes open. If we go down to the hourly bar here, you can see that the market has a bit more momentum to it. It's starting to build as it comes down here. We're getting this nice, up and down motion. The market is chewing its way down rather than just spiking its way down. These kind of moves here, where the market spikes. Let me adjust this here. Where the market spikes like this are usually the ones that get reversed easier. The ones that make this chewing motion down tend to have some legs to them. That's why I say there's a bit more momentum, because the buyers are trying to come in and push the market up over here, whereas the sellers had complete control. So again, keep your eyes open. Watch for the setup. We are in the double bottom area, which is giving us a good indication for a possible trade. Remember, keep your eye on that 3-bar reversal, which at this point is going to be keying in a lot higher here, about 99.35.